So, hello. How's everybody doing? So, I hope everybody's having an awesome weekend. This is 50 pips, rocking and rolling here, 22nd of March, 2015. I'm not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the website. On the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, what's going on? Should be an interesting week, guys. Let's see what's happening. I mean, keep in mind, in terms of the data front, in terms of the wires, the most interesting thing is, Monday could be a bit of a choppy day. We do have Draghi speaking. I mean, the action starts really on Tuesday because we've got all those PMIs out, which are going to be clearly very interesting to see. And don't forget that we also have the CPI out of the UK and out of the US. So that's clearly going to be something very interesting to keep an eye out for. Then on Wednesday, we've got the IFO out of Germany. So that's going to be interesting. We've got some more data out of the US. We've got retail sales out of the UK on Thursday. We've got BOC, Paul is speaking, and unemployment claims out of the U.S. We got Carney speaking on Friday. Final GDP out of the U.S. Yellen speaking on Friday. If I remember correctly, we also have the trade balance out of New Zealand. I think that's the early part of the week. I think Tuesday, right? So clearly there could be some movement. Now we're at a very interesting juncture in the markets, right? Because we've got to see if we're going to see a bit more of this healthy dollar correction or not. But let's start to look at some of the futures pairs because we didn't do any of the future pairs last week. So I mean, in terms of the ES, I mean, fairly standard kind of moves, right? We've got the rotation higher continuing, as we keep on saying. There's interest. The play for us is not to be structurally long, but it's to try and look at interesting plays to try and fade this in terms of weakness. So fairly classical action, right? We see this ramp up on FOMC day, right? What we always say is there's very little edge to try and fade the move on the actual day. You probably see a decent retracement of the move on FOMC the next day, some nice opportunities to short the following day for a little reversal back down, previous resistance as support, doesn't even get back to the 50 back of this move and continues to rotate higher. So the grind higher is continuing, right? Unless we get, as we've been saying for a long time, unless we get some clear indication or we start to see rates rising, this is going to continue to grind higher. So going into the week, above this previous high from FOMC high, we'd expect this to continue to hold a mid-tone and continue to grind higher, trying to make it all the way back to those highs. And basically below, we could see some kind of correction. Keep in mind that these moves to the downside will tend to come a lot quicker unless it's on news than the ones to the upside. And any sharp sell-off will be focused on this previous resistance that got bought here, but for the time being, pivotal level into the beginning of the week, 2098s. Again, remember, tops tend to be some kind of a process, so let's see what happens here. In terms of the crude, again, very interesting action here. As we said, it's not necessarily about that 45. It's about the pair, whether crude gets traction and manages to attract new sellers below these lows, right? And what is apparent is that it's not able to attract new sellers, right? It's not attracting new sellers at lows below that 45, or at least not enough to get decent traction to the downside. So as long as we hold these lows, as long as we hold this 45, we'd expect to see this correct. And the first level we're looking at is possibly for a move back into the 50s. 50s is going to be pivotal going into the week. 55 to the upside, 45 to the downside if we get into that 50, and that will be mid-range chop zone for the week, okay? Remember, as we've been saying for a long time, we expected this to base inside this 55.45, but that basing could take months, if not quarters. So let's see what happens. In terms of the metals, fairly interesting action. Silver, we kept on saying, it's all about these 16s. And if anything, we're buyer of 16, not if a seller is 16, as we assume that this is a structural low that's being put in, and this is a medium-term bottom that's put in, and we'd expect to see some kind of rotation back either to the upside or at least those 18. So look at this 16 and being pivotal. Like daily closes back above the 16, we'd expect 18s to print. back below. This could get heavy, and then the focus will be back on those 14s, but it looks like we might see a little bit of a move up similar to crude into that mid-range. We're looking at 18s for silver. In terms of gold, again, no range shift. What we kept on saying is it's all about those lows. It's all about those lows. We would not be selling into a brick wall. We would not be selling below those 1150s. It seemed the price action on the chart, again, showing that it was unable to attract new sellers into those lows. That's our range low at the moment. Our range is still 1250, 1200, 1150. And so we said, you know, unless we can get traction below, we expect this to bounce and to move back into the 1200 level. We'd need daily closes aggressive below those lows to talk about a possible range shift, right? And a move back down and changing that range from 1150 to 1100. But at the moment, it's still holding, so we're looking for this to move back into the 1200s. Keep in mind that the shorts, that's going to be a sell zone for the shorts, right? Sell zones need to keep it below that 1200, right? So what the shorts will be looking at is any move back into that 1200 to sell and try and get that range shift for new lows, where the bulls want to see this back into 1200 to hold this bottom and look for a press back into the 1250s. Basically 1200 pivotal for Momo, bull bear line for the week. Now, where does that take us into the Forex side? Well, I mean, again, it's all about a healthy correction on the dollar. We kept on saying, you know, nothing tends to move or only moves in a straight line for a sustained period of time, even though it can remain irrational longer than you can stay solvent. So basically, we've seen a decent correction. You know, we kept on saying, you know, for us, this whole, you know, the notion that Yellen would go in and say, okay, you know, we're cutting rates, you know, based on what the economic data was, what the commodities are doing, what the dollar was doing was pretty slim, right? So, and again, everybody, their grandmother, their hamster, and their long lost uncle was long the US dollar. So, you know, not very surprising. Now, what's going on here? I think in terms of the yen, what's interesting is going to be how we behave this week. You know, we kept on saying, if anything, similar to the ES for us, we're looking at tactical opportunities to fade these highs. And as long as these highs held, we're looking for this to correct back down, possibly into the 118. So that's still in play. We'll have to see how this trades. Now, this level is really important because as we've seen from a broader picture, right, you know, look at, you know, these monthlies will start to be interesting. It's very early to talk about the monthlies because, you know, we still have plenty of time, but I'd still, you know, look at them with a quarter of an eye or an eighth of an eye, right? And just keep in mind, you know, the picture could change a lot if these start to press into the end. These moves we've seen recently start to press into the end of the month, right? And this whole level is really key for the next big move on the yen. And keep in mind that even if we did have a bit of a broader correction back into the yen, you know, it's not the end of the world. It doesn't change the trend at all, right? So right here, what I'd be looking going into the week is you can see that basically we've got this ascending trend line here that keeps on supporting. We've got buyers coming here, but if we start to trade aggressively below this at the beginning of the week, right, and the data starts to support, I would not be surprised to see a move, fairly quick move back into 118. You know, if we hold this, we'll still see choppy at high potential, press back into those highs, but clearly interesting level, interesting area to keep an eye out for. Now, Euro, what's going on Euro? Again, fairly classical moves, a very decent bounce at that low range. You know, we discussed that basically everybody was looking at that 105, and the fact that we broke those 105s and could get no traction at all, we actually bounced at one of our supports. You know, we had this line is just previous support on the monthly. This has been on our chart for ages, pretty much the pip, right? And then bam, right back up into those 107.30s, which we said was the pivotal level. Now, you can see how pure the bounce is on Euro, right? Whether you're looking at it on a weekly back into these this whole support zone, broader support zone after we broke the 105, or you can look at the monthly, it's even purer, right? Bam, into that trend line and smack back off. You know, just press below those 105s, caught the last, you know, probably retail trying to short that break at the end of the move. As we always say, you don't want to get to the party when the punch bowl is empty. And another thing we always say is usually, the last pips can be the most expensive. So, the more it kept on going in one direction, and the more everybody got excited about parity, we say, the more you have to be careful about the consensus trade. Now, that doesn't mean we're not going to parity, but it just means that stuff does not only go in one direction, right? So, and you can see basically even on the FOMC, the move was pretty nice. What happened is you see we started to well, let's see. Let's get on a 1 hour. We had these spike highs. We popped up on the FOMC. Very aggressive move, right? Even more aggressive and surprising is the fact that it gave everything back. I mean, this was, I really suspect this was a low liquidity chop. Even if you're looking, the way the market was trading, the kind of fills we were getting in the, it just felt like a lot of low liquidity chop. We came right back into here, and there you go, right? Previous resistance, acts as support, and bam, right, rotating higher. Now, I would be very surprised. Again, let me take that back. I don't like to use that kind of word, not surprised, but I think the odds are that we open tonight trying to press back into Friday's highs, try to cause some more damage to the upside. I mean, as long as we're broadly speaking inside the FOMC range, there's just a lot of chop, but the way this is trading, clearly the upside is attracting. Now, and that goes for everything. You'd expect the way we close, you'd expect to see cable open today. We might get an open a bit here, so we might see it live while I'm recording. Cable try to pop up and take out Friday's highs. You'd expect Euro to try and pop up and take out Friday's highs. You'd expect Aussie to pop up and take Friday's highs. You'd expect Kiwi to do the same thing. You'd expect CAD to maybe try and take out Friday's lows, right? Just the continuation of the Friday move, just to take out some of the fortune seekers that put in trades with tight stops end of the day. So, but here going into the week, what I would focus on very clearly, is how we behave on a daily close basis around these 0730s. If the shorts can smack this back down below the 10730s and we get daily closes below, then we might have seen the correction. That might be done and dusted, and we might be heading back for those 105s. But as long as we keep on closing the days back above the 107s, then I think those 110.90s will attract that whole zone, 110.90 into 112.30s to the upside. They'll probably be attracting, right, as we see a bit more squeeze. What's going on cable? Cable, very aggressive move. We talked about the fact that it was all about those that 150, 148 zone. And right now we're smacking that area. A lot of people getting uber excited once we're trading below the 148s. Again, you have to wait for these things to settle. And then again, people getting super excited once it traded back above the 150. We really have to see we have to see a weekly close after this FOMC. We have to see this close below 148. And then we'd expect, very bearish, we'd expect 144.20s to come relatively quick, or weekly close above the 150, and then we would expect 153s, 154s to come. As long as we're inside that 150, 148, it's just looking for direction, right? The other interesting thing is you can see, even if you're looking at it on a daily, you see that, we are making higher highs here, so it does look like it wants to take a stab back above that 150. What I would say from a closing basis on a daily, if we close below the 150, look for the market to probably try and test that 148 again. We start closing back above the 150 on a daily basis, that could be, a call for the way the weekly will close, and then we try and get that ramp up back up towards that, 153s, 154s. What else are we looking at? We've done that. CAD, what's going on CAD? Pretty much double top here, heavy into that low range. The fact that Crude's sketching a bit of a bid, definitely helping. And again, what we said is keep an eye out here, because it clearly looks like it's unable to find new buyers at highs. Any kind of break below these lows, we would expect a very aggressive correction here. Now, you still have to respect all the support that's coming in, right? You see all these bids have been supporting all the way back down into the, oops, not what I wanted to do, sorry. All the way back into the 140, 124s, into these 123s, basically, this whole support. As long as that gives, expect a lot of choppy, but be very, very careful, because if we start to get, daily closes above these highs, get a very aggressive rip. Those 130s are going to come into play fairly quickly. We start to get daily closes back below this support, then don't be surprised to see us printing 120s, 119s, right? So clearly this could move. What else have we got here? Kiwi, beautiful trade, one of our favorite charts here. Very nice action, right? We got this double bottom here, traded safely away from that double bottom into that whole FOMC, bam, rotation higher, 37.60s pivotal for action. You know, especially we hold above there. We expect those 76s to come into play. We retrace back, bids came in, and bam, rotation higher again. Beautiful level. Now keep in mind, because be careful, you have to respect the 7600, because this is that whole level where, you know, we talked about possible market talk about possible RBNZ intervention, or at least when they came out on the wires trying to talk this down hard. So you do have to respect that 7600, but I'd be very cautious around this zone. You know, if you're looking for shorts, there are a lot of decent short plays around this whole resistance zone, but we start to close on the daily above those 7600, then I would not be surprised to see those 80s come into play. Now, if we keep on closing back below the 76, this could be back into the 7360s before we could blink, but clearly very, very interesting level. And it's all about, again, are we going to continue to see a bit of this healthy correction on the most recent dollar move? That's what it's all about. And you know, you could see that also on EJ. We said it was all about those 128s, massive level on the monthly. You know, it's not that the chart doesn't look heavy. It's not that the chart doesn't have pressure on. But what we said is, again, price does not tend to only move in one direction. And we've got such an aggressive move with no kind of retracement. And you're going back into this huge support zone, also 100, 200 on the monthly. And you see price is unable to get traction below those lows, you know, you have to respect that kind of price action. And what it means is most likely, you know, unable to hold below that 200, unable to hold traction into those 28s. Does it mean it's not heavy? Absolutely not. But it means that it would be healthy to see at least a 200-300 point move back into that 100, if not into this previous support acting as resistance, right? It's just a question of healthy market action and what the odds say. If you look at Aussie also, trying to bottom here, unable to get traction below those lows, 76.20s pivotal for action. Again, as long as we hold above, we wouldn't be surprised to see move back into this 80 mark. We'll have to see how this trades, but clearly very heavy if we start to get traction below. But here there's a risk of some kind of correction. I'd suspect a lot of people to try and short it off these zones, but you know, it's all about, are we continue to see this kind of correction here? So, you know, that's pretty much where we stand in the week. I think it's going to be a very interesting week. I think the open tonight is going to be very interesting. So let's see what the market gives us. I'll see you guys for London Open. Have an awesome one. Thanks for listening. And as always, have an awesome one. Take care, guys. Bye-bye.